Hello, everybody. Happy Wednesday. How's everyone doing today? Good morning, Zello. Sterling, thank you for putting in all the comments from Waller, who's obviously with Hassett losing some support potentially. He's now in the front running for the Fed chair, so he's definitely auditioning for that part. Auditioning very strongly. Good morning. There you go, Sterling. Oh boy. You know what? This is why I want to get rid of the Fed. If you want the Fed, if you want the Fed to stick around and manage some stuff with bankers, they're fine. But no, none of this FOMC. Let's do a rule. Let's do the rule. Because how can all these different people have drastically different neutral rates? You need a rule. And then they contradict themselves in the same friggin' speech. They contradict themselves in the same friggin' speech. So, where is it? Hold on. Where is it? There's no rush to cut interest rates given the outlook. The job market says the Fed should continue to cut rates. Then we have the neutral rate is 50 to 100% basis points over. So there's still 150, they're 50 to 100% basis over neutral. He can't say this. Fed rate cuts have helped the job market. There is no study that shows a direct correlation. At best, it's an indirect assumption that rate cuts. So see, they just want to do. Everybody just wants to do what they want to do. There's no science behind this clown show. That's why we keep going through these boom and bust cycles. Then they're like, oh, let's just save the markets. Let's not let anything work itself out. Thanks for getting me riled up, Sterling. Good morning. I was reading that anyways. You didn't do it, Sterling. Good morning, OD Green. Good morning, Royal Palms. Good morning, Yogi. Yes, General Mills, which is on my list, especially for next year. Looking for a more stable weekly bottoming pattern. Again, the forward P, it did beat. Revenue is still down from a year ago, same month a year or same quarter a year ago. Your PE is still running around 8, but the forward PEs are up around 12. So still watching a 5% dividend. Really good thing. General Mills is not going out of business. It has not hit the 87.5 rule yet, but is one that I check in regularly with. Good morning, and I'm not trying to call it bottom. I just want to see some things turn around from the fundamental side slightly and a nice technical bottoming pattern. Good morning, Patrick. Toro, beat. Good morning, holy. Good morning, Heinrich. Hello, Charles. Retailers are doing well. XRT is doing well. Good morning, Balaji. Good morning, Anissa. All right, so halfway through the week. We already had Waller speaking. Thanks to Sterling for putting it on. We got Williams speaking coming up shortly. We got the EIA numbers. Nice little bounce in crude. There was a little mini 1 hour double bottom, by the way. I did not, again, sleep much last night, but I got a lot of caffeine going this morning. I posted yesterday where I didn't have much caffeine during the live stream. We got Bostic speaking. So there we go. Tomorrow we have the remember we have the CPI numbers. We have the CPI numbers coming out tomorrow. S&P 500, the heat map. Mega caps sort of mixed. Amazon bouncing chips besides Nvidia. A little better. Energy bouncing back with oil. Oil hitting the 55 very key levels right there. So we'll take a look at that too. Groups, energy, basic materials leading. Everything's up today. Let me just refresh this. Verify that still. Yeah, everything's up today. Fed watch, 78% for a pause. Fear and greed in neutral mode. Schiller PE, 40.04. Thank you for Sterling for putting in the earnings. Main one I was looking at was General Mills this morning. again, will be a fantastic long-term play at some point. After close, we have Micron. Tomorrow, Accenture, CarMax. It's more important after the close, though, tomorrow. Today, though, do not ignore Micron after the close. So, looking at not the continuous contract yet, the March contract, still holding the 50 EMA. Hold on, I got to say. Yeah, it's got a little mini potential patterns, but I'm talking if you're looking for a long-term buy and hold, it does have a potential weekly double bottom for a longer term pattern. I am still being very patient with it. What causes a buy stop in order to be filled below the requested price? If any orders filled at the stop price, if you're trying to stop in to something, and let's say you're all right, if it gets above 70, if any orders filled above 70, but there wasn't enough there to fill every order, and then the offer dropped down, you can get filled below. I mean, it should be great if you're trying to stop into something. You get filled better than your stop price as long as just verify it traded at your stop price, because in order to trigger a buy stop, it didn't mean you would had to get filled. It means it traded. There could have been one share go off at the stop price, and that would have triggered the stop in because it traded at that price. And then it's just a matter of where you get filled. All right. Potentially pay attention on the March contract. Remember, we rolled March contract. Pay attention to yesterday's high. That's what I'm watching. That would be a %B buy setup. Okay. This was not a double. It's extended too far. You can see just barely too far, like by a couple ticks too far. That's what I was watching. But either way, that would have not have triggered yet either. Okay, right now, we're just grinding higher. I'm still watching yesterday's high. Yesterday's high. Other levels I'm keeping an eye on now. We're bumping this level down a little to right around 68.40, 68.42. This level has been reinforced. The 68.64 was some pretty decent resistance overnight, blew through it, and then retested as key support. We're against a minor resistance level. So if we start moving above 68.82 area, going to potentially look for a front run for a potential %B buy. Remember, %B buys are not held if it does not close above yesterday's high. But that's what I'm looking for. If we were to roll over, take out 68.42, and roughly we dipped below the 50 yesterday but closed above it. So this overnight low, it's very key. Then I will be looking back to 68.17. If we took out that, then this is where I will look for potential intraday shorts down to 67.85. Something is definitely shifting. We're starting to see on more bounce moves, more selling pressure come in. We are at daily cycle bottoms, nearly got to oversold levels. So I'm still looking for the bounce play, but on this bounce play, it's got to still follow through above 69.24 on a closing basis. This is not yet a sustainable bounce play unless we close above 62.90, 69.24. 69.24. Good morning, Jake. Did I say it already? Yeah, I probably did because I already answered your question. Oh boy. So that's what we're looking. Pay attention though. If it takes out the 50 and then yesterday's low, we could make a pretty quick trip to the 67.85. We're still seeing selling pressure come in. That's why it's very critical now. The March contract for the NASDAQ, we were up above a little earlier above yesterday's high. Still watching, we're back trading right in that area. %B buy potential also. All right. Even on pullbacks, I'm paying very close attention this morning to the 625, 390 390 area. We've already tested it. If that does not hold, then I'm going to be looking, I'll put up my harmonics, just showing you what I'm doing, and then I'll be looking closer to 25,290. Okay, if this area holds and we can sustain something, this is into a clear path move. All right, the 50% harmonic, where we're getting the first cross rotation zone is 25,598. So intraday, if we rally up there, that's a very key target for me, at least a partial profit target. And then 25,729.75. So 25,730 on a key closing basis to flip the probabilities to sustain this rally. Other than that, it could just be a bounce play only. Support, if we lose 25,390 area, 25,335, if we lose that, I'm going back to 25,204. Yesterday's low, 25,073 in the March contract. And then if we lose that, 24,892 is my area. So 24,900 is roughly my next target lower. Hope that makes sense how I have mapped that out in the Dow. In the March contract, we do not have a percent B buy right now. Still was looking at the same area, 48,550, which we already tested as support a bit earlier. But this gets a little tricky. This is why I'm not so focused on the Dow right today. I'm more focused on the S&P and NASDAQ. 48,677. I'm also paying attention to this little channeling pullback. So it's really got, I misdrew that slightly. It's a best fit pullback, channeling pullback area. I'm more paying attention if we start getting back above 48,907 to sustain something in the Dow with the pullback to the rotation zone. It's not the first thing I'm looking at today. We rolled in the Russell. The Russell roll. So there is a percent B buy on the Russell on the March contract if it can get above yesterday's high. It's got a little heavier lifting to do. First key area I'd be looking at is 2555, 2,555. We got to sustain above that. That's what I'm looking at in the Russell with the roll. The VIX. VIX, you know what? Again, it's still, this market is so complacent. Even with the minor selling pressure, it's very complacent. That's what I'm also keeping an eye on. If we start getting above 1650 today, I will watch for more of that breakdown. But other than that, if we continue to drop, that's what I'm looking at the S&P and the NASDAQ for those percent B buys or any other intraday buys. What else? Contact your broker and ask them why it was triggered then. If you show no trades, because they have to show that why it was triggered. Okay. So don't be afraid to call them up and say, why was this order triggered? And again, you might not show a trade there because sometimes feeds don't always show, for some reason, don't always get the trades, but ask them. And make sure it was a buy stop limit order. DAX, technically, if we get above yesterday's high, it's a percent beat buy. Already run up there and was rejected from there. We'll be watching again. There's very key support area you can see over here. This area, this 24 to about 2450 is very key support. So we possibly get a very sloppy double in here. Either way, it's roughly the same area, 24,200 to trigger any buy. If we cannot hold this level, Though then next key area to watch for is about 23,860. The yields. Oh boy, dark screen. Yields are still firming above prior resistance, still holding support with the rising rotation zone. I'm still looking if we start breaking above 4.2 and the 30-year holding the rotation zone and holding the last little support area right here. So, still looking for the inverse head and shoulders to finish playing out. Crude. In case you was wondering, there's a mini 1 hour double bottom. That's fully played out. Now I'm watching on any pullback for a stronger bottoming pattern. That little one is played out. We have very key overhead resistance is 57, but I'm watching for if we roll back down for a stronger bottoming pattern. There is a lot of support down here on that $55 mark. Natty Gas for a bounce play also has another percent beat buy, but we'd have to close above yesterday's high. Again, these are for aggressive bounce plays only. This is not for a long-term sustainable pattern, but if we break below 3.79, I'm watching for a potential roll gap fill and a retest of the 200. Gold, it's been a little selling pressure up here recently, but no major topping pattern. The little 4-hour double, which did not trigger or confirm, has turned into a triple. Remember, it's against the rotation zone. So, silver breaking out to new recent highs. No topping pattern here just yet. Copper moving sideways. Going to see if copper starts breaking below 528. The short-term move for me is the short-term up move is over. Dollar index trying to follow through with a percent B buy. We've already hit the rotation zone. Euro, which hit the second target in the double. This would be a percent B sell out of overbought territory. Would I be doing it in the euro? No. I'd be just looking for a potential pullback and a more substantial topping pattern setting up. The yield's still climbing. There's your 10-year yield. So now we do have a potential double top. Probably will not trigger. But there we go. Yield's still climbing. The yen market is very complacent right now with yen yield still climbing. This is going to get interesting. What else we have? We have the good old Bitcoin still holding this key level support on a closing basis. But we've broken down from the channel. I'm at least watching for a more substantial retest of the lows here. Maybe set up a proper double bottom, which we haven't really set up yet. It'd be very sloppy. Being very patient with the Bitcoin because we could see another leg down still. Spiders with here, again, watch yesterday's high, same potential setup. Yesterday's high being 681.08. We're trading 680.31. So on any key move, first area is really about 680.75, but if we can sustain above that, watch for 681.08. Above that, it's a percent B buy. Yesterday did close below the rotation zone, shifting it technically to neutral. So it's got to prove itself to me and then got to follow. Remember, any bounce here, my targets are 682.12 and 683.90 on a closing basis. That's what it's got to get. That's what it's got to get back above in order for any bounce play to be a hold. The Qs also we had about 613.50. Yesterday's high, 613.51. We're above there right now. It's got to sustain above there and follow through to the close above 613.51 for a percent B buy bounce there. All right. For it to turn into a potential slightly longer hold, it's got first target is 618.06. It's got to get above 620.85. All right. So if we do take out yesterday's lows, targets are 604.98, then 598.92. Yes, crude is at very major support. And we have Venezuela with the blockade. It'll get all interesting. I think crude's getting a little complacent too. It's pricing in a massive slowdown. And I'm not saying these are long-term holds, but there are some bounce plays now setting up. Crude was sit on the sidelines for a while. Now it's setting up for some possibly better trading action. Here's your GIS. Here's what I'm looking at longer term. Again, revenue down. If you compare year over year, last year it had a revenue of 5.14. This year you got 4.86. So revenue's still declining, even though it was a beat, still declining. If you look above my head, it's a still dividend yield of 5%. The current PE is 8.91. The forward PE is closer to 12 to 13 because of the declining revenue. If we do get a bounce play, it is out of the way of the rotation zone. Okay. Still though, if we get another major market sell-off, I'm watching closer to this 87.5. This is a tradable bounce for me, but to really get into something interesting, I have to then see it sustain on any bounce. But I am keeping a very close eye because when this starts to run, it can really run and you're collecting a decent dividend. This will get beat up till it's not. I've been making a list of all the stocks I'm keying off of for next year. This is the time I do it end of year. And there's a lot of dividend players. Also, some oil and gas players. A lot of stuff's been beat up. Lots of dividends are really good in that space. And there's a pretty decent floor in oil, even if we slow down. Yeah, no hurricanes hit this U.S. land this year. So, we've got Micron. I haven't updated this chart in a while. Micron, by the way, I have an update on this platform. Keep an eye on this longer term. I mean, we have earnings today, but this is a longer term weekly pattern. Keep an eye on this one because the weekly rotation zone would be out of the way. And Microsoft's been on a tear. I mean, Micron's been on a tear. So keep an eye on this one. All right. You can also see it there on the daily. There's a little mini double top that played out before, and now it's turned into a weekly double top. So that's the only thing I'm going to be watching going into earnings with Micron. With that, don't have much else to say. Still, just watch these percent beat buys on the S&P again going into the open. This 68.64 level. If we do take out there, if we do continue to drop, because there is selling pressure, this isn't guaranteed up move. I'll be watching closer to 68.50 if we get some sustained selling after the open. With that, I shall talk to everyone tomorrow. Thank you for tuning in. Bye for... Oh, you want SNDK? SanDisk? The good old disk of sands? Keep an eye here on SanDisk. This has been very key. It's a very key support area here. If you look here on the closing basis, you can see here, right, it's this key close right around 195 is very, very key. All right. Thank you for bringing this up. I don't normally touch on this stock, but it has not been able to sustain. Remember, it got up to 50 to 62.5, which is the rollover zone. 1, 2, 3 times and not been able to get above that 62.5. If it loses this 50 EMA on a closing basis, it hasn't done it yet. If it loses this on a closing basis, watch out. Okay? Really watch out. Look, what's the PE ratio of SanDisk? It doesn't have one. Earnings per share negative. This is not saying it can't get one, but this is trading at an incredibly lofty price. All right? If it loses this 50, I would not want to be long SanDisk. If you look at the weekly, you're holding the top of the rotation zone also. Why also would I not want to be long this? Because this could easily drop to 160 in a heartbeat if it loses that 195 area. So be careful on that. Still then, though, it's still see it above 246.60 to sustain it. Yeah, to me, I'm watching again. With the way things are positioned, I'm watching for more breakdown plays in some of these. I'd change my mind if it got above 246.60. With that, we'll wrap it up for today. Bye for now.